Hello traders, this is TradeDog's weekly video, and in this video this is a default subject, bigger picture on indices. So German DAX and S&P and also additional US indices, Nasdaq and Russell. I'm going to go through the larger time frames chart, meaning 240 minutes daily and weekly charts. So the question after the Friday is, are bears are coming? Because we had a trend down day basically on all of these indices. Let's go to the charts. This is DAX. I'm starting with the German DAX, and German DAX on Friday broke below this very important larger time frame support zone, and that support zone was here resistance, then here support, and on the fourth test that was on Friday it was broken. And now, as said here, losing 390 leads to more downside, and more downside could very well come for DAX. On daily chart we had a daily 200 that was acting as a magnet for some time. It was tested this week and moved to the downside starting, and inside this move we had some. Also, a part of that was news driven by Bayer, by BMW on Friday, by this German flash PMI, but nevertheless market was just accelerated from here because this was larger time frame resistance, and also you could expect at the first test of the daily 200 to get some sort of reaction. But now we have a closing below this support here, and that is now it's going to act as resistance. Also we had a bearish wedge, bearish divergence, and now if you are going to make a fib like this, now you're going to observe where the first possible target is, and like always when you're using fib, first possible target is 38.2 fib retracement, which is here, and also in line with some of the zones that we have on the zones chart that we are using for day trading. Also, if you're going to make a fib from this here, so this was already a good move from the all-time high, and then we have had a good retracement, but from here you'll observe that the market made a half back to here, and now the same method we are going to use if we are going to make a fib retracement from here, and then expect the market to go at least to here. On the weekly chart, this is DAX cash index, and we can observe that we have a bearish engulfing candle on the weekly chart, and now that the DAX is again below 200 on a weekly. Let's go back briefly on this chart to daily, and here in this move on Friday, DAX has filled two gaps from March 20 and from March 8. I have deleted them from this chart. So basically on DAX higher odd scenario is continuation of the downside move at least to here. Let's go to the S&P. S&P 240-minute chart. So S&P was here banging on this resistance field, and I said that before, that market that continually testing with shorter difference in time. You know, you see this was big time between first and second test. Now we have 3, 4, 5, and now they made just a small pullback, shallow pullback, and gone above. And after they retest the zone and made this move that was on Thursday, on Friday it was completely negated and went below. And buyers that are in this range now are trapped buyers, and this was a bull trap, and we have now a false breakout attempt from the larger time frames. That false breakout attempt, now target of this is to go here to the bottom of this range, so target around 2007 130 as a first target, and you can also make a fib and observe that second target could be, of course, top of the range, bottom of the range, or 38.2 that is in the middle of this range. Similar situation was before on January, at the end of this move in January 2018, market made all-time high here, and then market made a move above this previous all-time high, spent like 2 months above it, and that was a false break, and all of those people that was trapped buyers contributed then to this downside move, and the same could happen now and here. So these buyers from here and buyers that were pushing this from this range also can now contribute with their closing and with their liquidation for the move to continue at least to here. On the daily chart of the S&P, again, important to label those days that are FOMC statement days. This one from the end of January was very bullish and market hold it. It was very important for them to hold, and they have retested that day here and hold it above it. Now this smaller red candle was this late FOMC statement from March 20th, and it was used just to retest this broken resistance, then acted as support, but that lasted just on Thursday when they made a short covering rally, and on Friday it failed. And going this like a back-to-back huge days, and Friday was a bearish engulfing day, is a bearish sign, and now we have a closing below this zone. On the S&P cash index weekly chart, so nothing decisive here on the weekly chart. We have some kind of bearish hammer. Let's observe just briefly on the daily chart how Nasdaq is looking. Nasdaq also have the bearish engulfing candle. Russell, that was leading to the downside. It was really an early indication, like in October. It was an early warning sign for market, and now again, because they made a move above the 200, it didn't continue like Nasdaq and S&P. They made an attempt here again, producing just a lower high, and now they are here again below the 200 daily. And on the weekly chart, Nasdaq has similar like S&P, a bearish hammer, and Russell has a bearish engulfing weekly candle. So again, the same verdict as for DAX is for the US markets. I think higher odds are that we are going to get from the Monday some kind of continuation move to the downside, and to really at least test this bottom of this range. And invalidation of this bearish scenario is that price goes again back above 2008.20 and firmly close above it. So that is the only invalidation that we could get, and I think higher odds scenario is a continuation move to the downside. And if you're interested in DAX trading, check my site. This is my site, straightdogtrading.com, and you can learn what I do here. And that is it for this edition of Stray Dogs Weekly video. So bigger picture on DAX and the US indices that is published every week on Saturday. I wish you a good weekend and good trading.